morning and welcome to Tuesday, June 24th. There are two stocks that I want to go through with you real quickly today. The first one is Mastercard, MA. All right, and the second one will be Costco, COST. So let's start off with Mastercard first. All right, as you can see, Mastercard has made a move up to this high, and you can see that the trend has changed. Short-term trend changed from down to up right in here, the green bars, right? And we've pulled back. Now, granted, we have broken down through the blue and the gray action zone, even the 50 exponential moving average. But the thing that gets me here is we are close not only to the 200 exponential moving average, but if you were to take it a step further and draw the Fibonacci retracements from this pivot low here up to this high, look at where we're sitting. So again, we measured from this low up to this high. We are back to the 50% retracement. The 50% retracement's right here, slightly above the 200. And I think this market could be bought in here. More conservative traders would wait for confirmation and for the market to actually break up through yesterday's high. So yesterday's high is 74.30. If you were to wait to enter at 74.40 with the stop, if you use that entry, I would use the stop below yesterday's low. So if you wait for the penetration up through yesterday's high. Yesterday's high again was 74.30, so your entry would be 74.40, and your stop would be directly below the low. So that's 73.20. I'd go to 73.10 on that. 73.10 would be a stop. If you choose to enter anywhere within the price range here, right? If you wait for a little pullback, then I would pull those stops and bring them slightly below that 200 exponential moving average to give it some room down in here. Right, does that make sense? So there's two ways to play this. Okay, you can place that initial stop loss below the 200 if you're entering anywhere in here. If you're choosing to wait for confirmation and a trigger, if you're waiting for the market to take out the high of yesterday, if that occurs first, your initial stop loss would go directly below the low of that bar. Okay, that's how I'd play Mastercard. Either one of those two ways I think would be a good trade. Second stock I want to look at is Costco. Okay, and this is interesting because yesterday's price action. Look at that. The market opened and closed on near the high in that gray action zone. If you can see right down in here, you can barely see that purple line, the purple. So basically the lower end of that gray action zone is a 200 exponential moving average. And what's running right behind, right where I'm drawing, is a 50 exponential moving average. So yesterday the market opened up near the high of that price bar, managed to trade all the way down, took out this low that was put in place on the 13th, and then rallied up, closing 2 pennies above where it opened. So that tells me that's kind of a blow-off bar. I call that a blow-off bar, right? I think this market moves higher. So if you buy this either within the price range or wait for confirmation up through that high, regardless of how you enter, your stop has to be placed just slightly below the gray action zone. Obviously, certainly right below the range of yesterday. Okay, so obviously you need to be at least 20 cents below 114.51 to 114.31. But I'd even drop that down a little lower. I go to 114.21 to 11, getting it right below that blue action zone. Okay, so let's look at the Dow. The Dow Jones on Friday, the 20th, was not able to make a new high, whereas the E-minis did make that new high. So we've got a divergence between the Dow and the S&P, right? And then the Qs kind of followed the E-minis where we made a new high last week. Okay, so we've got a little divergence in the indexes. So, and obviously the Russell is nowhere near that high, and that's been lagging. That's been the laggard of the four, right? So look at Mastercard. Take a look at that. Take a look at Costco. And let's see what happens today. Have a profitable day, and I'll be back with you tomorrow. Bye for now.